Nearly every person on the planet looks at the Rubik's Cube and thinks the same thing. This bad boy is impossible. And for the most part, you'd be right. I mean, there's more than 43 quintillion different possible scrambles. Almost nobody can do it. But what if I told you that not only could you learn how to solve the Rubik's Cube, but it's not that difficult. It's not that difficult at all. And what if I told you that not only is the Rubik's Cube not that difficult, but becoming a millionaire is not that difficult? Sure, it's a weird comparison, but the reality is the only reason why you can't solve a Rubik's Cube is because you haven't learned the formulas yet. And the only reason you haven't become a millionaire is because you haven't learned the formula yet. Now, I know that we don't all want to know how to solve a Rubik's Cube, but what we do all want to be able to do is live a financially comfortable life. We want big houses, we want expensive cars, we want nice fancy things, and we can have all that. We just have to learn how to put the processes in place at the start, and we can get all of that and more. So sit back, enjoy that coffee, slouch back into your bed a little bit more snug, and let me show you how. G'day ladies and gents, I am Dan, and today I want to show you that becoming a millionaire is nowhere near as difficult as you think, it's nowhere near as scary as you think, and it's nowhere near as out of reach as you might think. And in fact, you only need a couple of ingredients: consistency and time, and a little bit of money, but way less than you think. And the best part is, absolutely anybody can do it, even you. Now you might be wondering, why in the world would I listen to this random guy on the internet? And it's a very good question. And for starters, how could I have glasses this smart looking and not know what I'm talking about? Those aren't even my glasses actually, those are my fiance's glasses. But what I will tell you is that I'm a totally normal guy. I'm not some genius. I'm not some billionaire who has 400 cars in their 3 million car garage. I don't have any of that. I'm a normal dude, but what I do have is I grew up in a household where my parents understood finances, knew how to make money, and taught me that from a very young age. Since I was 10 years old, my parents were teaching me how to save my money, how to invest my money, how to be responsible with my money, and everything that comes in between. And that's the only difference between me and most people that I meet. I was lucky enough to grow up learning how to do that. And here I am, 20 years later, age 30, in $1 million house that I own. I have no credit card debt. I have no car debt. I have no student debt. I have no debts at all. And I'm not saying that to brag. I'm just saying I was lucky enough to learn so many things along the way. And that's exactly what I want to share with you. I want to help you become a millionaire as quickly as we can possibly do it together. So sit tight and let's do it together. All right, enough dilly-dally. Let's get into it. Now, the beauty of this strategy is that it requires very little skill, very little knowledge, very little expertise, and really almost no effort, to be perfectly honest with you. And yet it is one of, if not the best and safest investment strategy for everyone out there. And that is no exaggeration. That is no clickbait. I truly believe that. And I know it's very possible you guys are watching this right now thinking Dan is an absolute loony. He has lost his mind. He's lost his marbles. But if you don't believe me and you don't trust me, then check this one out for size. This is the king of YouTube finance, Graham Stephan, from a video that he posted over a year ago.
What's up you guys, it's Graham here. So let's cover one of my favorite ways to invest ever besides real estate. And I would even go so far as to say that this is the best, safest, and easiest long-term investment strategy out there for most people. And also, this is the investment strategy that requires very little work, no skill needed, and still has some of the best returns out there. And even more surprising, what if I told you that this investment outperformed 99% of individual investors and almost 95% of hedge funds? And this is something you can do with about 20 minutes of your time. And yes, I know that you know what I'm already talking about here based on the title of the video, but let's drum up a little bit of suspense because I'm talking about Vanguard index funds.
Thank you, Graham. Shout out to the GOAT. And in the spirit of Graham, smash that like button for the YouTube algorithm. That was my attempt at a wink, by the way. So let me introduce you to your new best friend, index funds. Put simply, an index fund is an ETF, an exchange-traded fund that allows you to invest in an entire market all in one go. For example, the entire American stock market. You can own a little piece of all of it with just having one stock. Effectively, gone are the days where making money in the stock market meant you had to be an expert, you had to pick the winners, you had to know which companies would do well, which wouldn't, read all the reports, know where they're headed in the future. None of that stuff matters anymore because there's a system now that is so simple for the average person to get in on all of it. If you wanted to own a tiny percentage of the entire US stock market, you could spend $83, roughly, that's what it is when I'm filming this video, on one piece of the entire pie of VTIAX, which is the entire US stock market. And you don't need to understand any of those companies. You don't need to know anything. All you need to know is that the US stock market goes up over time and has done for its entire history. If you wanted to buy a small portion of the entire international market, you can do that. $28. If you're Australian and you want to invest in the entire Australian stock market, you can do that. $82. All of that is super affordable and you don't need to be an expert. That is what's beautiful about the index funds, and that's what's going to make you a millionaire. All you really need to know, like I said before, is that for the last 100 plus years, the stock market has gone up in America and Australia more than 10% a year on average. That is crazy gains. To give you an idea of how good those gains are, at the moment in Australia, the interest rate on most savings account is about 1%. So if you're making 1% in the bank account, you could be instead, if you put that same money in the stock market, just buying a little piece of the entire stock market, you could be making 10% on your money. And just in case Graham's word and my word aren't quite enough for you, try this one on for size. In 2007, Warren Buffett made a $1 million bet with an American hedge fund that over a 10-year period, their active investments would not beat a simple S&P 500 index. And while they spent their time, money, and effort into researching companies, timing the market, buying and selling stock, all of that jazz, Buffett spent seconds investing in the overall S&P 500 index, just like you can do in a matter of minutes, which I'm going to show you later. Sit tight. He did that and then did nothing for a decade. He didn't read the news headlines, he didn't look at the quarterly reports and the financials of companies and do all sorts of different research. He did none of that. He just sat tight for a decade, lived his life as per normal, and guess what? He won that bet in a landslide. And Buffett has even said when he passes away, he wants 90% of his estate to go straight into a low-cost Vanguard S&P 500 index, because it is that simple. You just have to bet on your country. If you believe America's going to do well, then bet on America. If you live in Australia and you think Australia's going to do well, then bet on Australia. The biggest thing that holds people back from investing at all, and the reason most people just leave their money in the bank account, is because it's easy, it's not scary, you know the banks are paying you even though it's a small amount. The only hurdle you have to jump over is your own fears of getting into the market. And hopefully going through this video now, everything I'm about to talk about, we're going to get into the juicy stuff now. Hopefully that is going to give you the confidence to do this yourself. All right, enough of that. Let's get into it. Step 1. Open an account with Vanguard, and it only takes about 10 minutes to do it. And don't worry, I am not sponsored by Vanguard. I have nothing to gain from this. I have no affiliation. There is nothing, I promise, for me to gain. This is just what I do. I'm going to go through now and explain the strategy, what I do, what I implement, and this is what I do. So step 1, open an account with Vanguard, 10 minutes of your time. Step 2, take money from your existing bank account and transfer it into your new Vanguard trading account. And step 3, invest in the index funds that you like. Simple as that. And don't worry, if you don't know any index funds, I'm going to go through all my favorite ones in this video for you. Now, the only other piece of the puzzle is to invest regularly. That is the only other piece of the puzzle. Take an amount that you're comfortable with, at first especially, an amount that you can afford to put away regularly, whether it's every time you get paid, every month, every quarter, once every few months, whatever it might be for you that suits your needs, and do it regularly for as long as you can, if not forever. And like I said to you earlier, this can be a daunting process. This can be a bit scary, but it's kind of like starting your homework, starting an assignment, starting a new job, starting your own business, whatever it is. The scariest and hardest part is the first transaction. Saying, yep, today's the day, I'm gonna do it. That is the hardest part of the process. Once that's all set up and you're rolling, it's not that difficult. Now here is exactly what I do. I get paid every 2 weeks. So what I've done is I've organized an automatic transfer from my bank account to my trading account. Every time I get paid, the money goes into my Vanguard account, and then I go into Vanguard and I buy the index funds that I like right away. I don't look at the price, I don't look at the news, I don't think, I just go in and I buy those indexes. So for me, every 2 weeks when I get paid, I put 80% of my investing portfolio into VAS, which is the ASX 300. It's an Australian stock exchange. And I put 20% in VGS, which is the international markets minus Australia. And I do that because it makes me feel like I'm investing in Australia as a country, their stock market. And the international one is all the major companies in the world, which I believe are going to do well, as they have forever and ever. I think that's going to continue forever and ever. And what happens is 50% of the weighting of VGS is geared towards the American market, the biggest companies in America: Microsoft, Apple, Amazon, Netflix, Facebook, Google, Berkshire Hathaway, Visa, all sorts of different companies. I get the biggest ones, and it cost me $83 a stock. And don't worry, those are not the only 2 ETFs. They're the ones I invest in, but I'm going to show you some other really, really good ones for Australians and for Americans as well. So sit tight, I will get there, I promise you. Now, the last really important question really is, how do I determine how much money to put into these funds? How much of my savings do I actually choose to invest? And the answer for me is very simple. I save roughly 50% of my salary after I pay off my mortgage and my water bill, gas bill, electricity bill, my phone bill. I save about 50%. And of that 50%, almost all of my money goes into the stock market because that is where I have the highest chance of having the best gains. Something else that's important to know is not only do you get the growth of these stocks, but they also offer dividends. So for example, VAS at the moment pays a 3.5% dividend. So every year, just for investing, as a big thank you, they put 3.5% of my entire portfolio into my trading account to do whatever I want with. That is money just for the investing. I don't do anything special for that money. They pay me dividends, just like banks pay interest. Stocks pay dividends. And for VAS, it's about 3.5%. And for VGS, it's about 2.5%. Now, as promised, I'm gonna go over the index funds that I like for Americans and Australians. Don't worry if you live somewhere else in the world. These exist for all of you. You just have to find your ticker codes that resemble the markets that you want. But you can glean from what I like what would be the same in your country. Now, before I go over these index funds, please know that this is just my research, my opinion. These are the ETFs and index funds that I like, and this is in no way financial advice. All right, so quickly for Australians, I've already gone over VAS and VGS. Those are the two that I like the best. A third one that I really like is IVV. Now, you can't buy that through Vanguard, but you can buy it through other brokers like CommSec, CMC Markets, Westpac Online. All of the major banks have their own version. You can buy it in many, many different ways. IVV tracks the S&P 500, the top 500 biggest US publicly listed companies. And I think that's a really, really good portfolio, a really good index. And for my American friends out there, three very similar stocks. You've got VTSAX, which is the entire US stock market. I like VOO, which is the S&P 500, tracks the biggest 500 companies in America, public companies in America. And I like VTIAX, because that tracks the international market, which covers really similar ground to what I went through for the Australian stocks. All three of those are really safe and sound. They've performed extremely well over the long term and have really, really, really low management fees, like 0.04%, 0.03%. So if you've invested $100,000, you'd be paying a total of $30 worth of fees. Almost nothing. And by the way, you don't have to pay those fees. They're automatically deducted from your account. You do not have to worry about that for a second. It is all done on the back end for you. And like I said before, there are so many different ETFs, different index funds that track all sorts of different markets, stock markets, international stock markets. You've got bonds, you've got fixed interest rates. There are just so many different things. And you can find whichever ones suit you. The ones I've mentioned today are just the ones that I really like, and also the ones that I actually do invest in. And for those of you who are still afraid to get started, we all started there. We all had to take that jump, leap over that last hurdle. We all had to overcome those fears to start investing. But if we can do it, then so can you. Open up a trading account. It takes 10 minutes. Invest a comfortable amount, the more the better, but a comfortable amount that you can afford. Do it regularly, every payslip, every month, every few months, forever and ever and ever, and compounding will be your best friend. Until next time, I'm Dan, and you've been Dansplained. See ya!